Now we look at divergent signals from indicators. Now these are the only signals, traders, where the indicator turns from lagging to leading signals. Now what does that mean? Basically, it helps you capture a turning point much more earlier and for you to get more earlier into the trade setup rather than a bit more later and diminishing your profit returns. So how do we identify a leading signal or a divergent signal? As you can see on the slide over here, as the price makes higher highs and the indicator makes lower highs, and that is when you can see it's like opening up like a fish like that. It's a divergent signal because one is going this way and the other is going that way. So that is when we call it divergent. And what do we then follow? We follow the indicator signal to go short or to go in a direction of further down. What does this all really mean? All it shows is that the indicator has become leading in against the price. So even though price is saying that it may be higher, it may be going up higher in terms of momentum, but the indicator becomes more leading than the price and it starts to say, no, actually no, because I'm giving a divergent signal, therefore the momentum is actually decreasing on the chart, and enter early to catch that reversal signal much more higher up at the top. Now let's take a look at a live example on the charts.
Let's take a look now on trading divergences on the Dow Jones market here. Now you can see over here what is firstly a divergent signal, as we have already explained before. It's basically looking for price to make higher highs and for the indicator, in this example the stochastic that I'm going to be looking at, to make lower lows. Now this is the only time when the price does higher highs and the indicator does lower highs. This is the only time when the indicator becomes a leading signal, as explained before. So let me now show you on the chart what I mean by this. For example, here on the Dow Jones, as you can see very recently in July here, as you can see that the price is making higher highs here, right? And then the indicator stochastic, if you do for like to like, so vertically that same high, if you take a look, you see it's going down, it's making lower highs, as you can see, right? So what it's naturally doing is basically, as the price is making higher highs, the indicator is doing lower highs, and finally then you can see there's a bit of a sell-off over here that is occurring. Now can we now see that on the charts as well? Not really. As you can see over here, that's a higher high currently at the moment, and you can see the stochastic is leveling off, so that's a little bit of a divergence as well, as we can see, but not as straightforward as this one. Okay, so that is a divergence, and that's the only time when it becomes a leading signal. If I were to apply the same thing on the MetaTrader chart, very similar again on the Dow Jones, again you can see that over here it's making all these higher highs, and over here it's making its lower highs. So you can see it's starting to fan out. That's your divergent signal, and that's the only time it becomes a leading signal. Okay, any indicator you can use that on, whether it's a stochastic, a MACD, or a Bollinger Band, it doesn't really matter. Okay, it's as long as it's range bound oscillators. Okay, RSI as well, you can use that on. Okay, so now go and do it yourself and see whether you understand the concepts and identify points on a different instrument perhaps, and see if you can spot those divergent points where the indicator becomes leading.
We trust you enjoyed our Traders Education Center tech video. To unlock the full tech modules for free, click on the link below and hit the subscribe button. Then go ahead to register with your contact details and create your unique username and password to enjoy the fully unlocked tech modules.